Nitin Gadkari, Kapil Sibal, Praful Patel, Ajit Singh, Harshvardhan, Satyapal Singh and Yogendra Yadav. All these political leaders have spoken to you on this channel, and today is their big day. Voters will decide whether these and many more leaders will be sent to the 16th Lok Sabha. Hello and welcome to Political Capital, the show where Delhi meets Dalal Street. I'm Harsha Subramaniam. The third phase of India's grand voting exercise is underway today across 11 states and 3 union territories, including Delhi and the surrounding national capital region. Over the next 1 hour, we'll speak to Ramdev Agarwal of Motilal Oswal Financial Services, Vikram Mehta of Brookings India, Pankaj Vora of Sunday Guardian, Rohit Prasad of MDI. Gentlemen, many thanks for joining us on Bloomberg. Ramdev, I'll start with you. You know, we're talking at a time when the market's very interestingly poised. What do you think? Is this rally a little running ahead of itself at this point in time, given the fact that the momentum seems to be with the BJP, at least if you go by what opinion polls suggesting?
Yeah, so I think this is what was expected, and the event is coming closer. The polarization of the votes and the clarity that yes, NDA is going to form the government. I think now the question is whether what will be the margin of this thing, how strong will be the opposition, how fragmented will be the voting. I mean, if you're talking about say 220, 210, I mean lower range of the whatever is the speculation, then the quality of government could be very different. What could be done post election could also be very different. So I think now from here, the speculation will move to the quality of mandate rather than the who's going to come into the power. So
that's a foregone conclusion, you would think.
That's what at least in our circle people are talking, that yes, it is done that NDA is going to form the government.
Sure.
But it's a question of margin, 220, 240, 260. Some people are talking about 280 BJP alone. So that's the kind of range people are talking about.
The broad mood, Vikram Mehta, in Bombay is that the NDA has pretty much formed the government already. It's only the quality of the government that's going to be formed, I would think. But tell me, in your view, what's going to be the big challenge for whatever government that comes to power to fix the economy, to get the growth back on track?
The challenges are known. We have to tackle inflation. We have to tackle the macroeconomic weaknesses of the economy. We have to revive growth. There has to be an effort to contain corruption. The administrative structure and system has been very slow. We have to revive, reinvigorate investment through administrative reform. There are many projects that are currently bogged down by red tape. Those have to be unclogged. Issues like GST need to be implemented. So the issues to revive economic growth are well known. Clearly, both the parties, mainstream parties, have identified it, but the BJP in its manifesto has given a fairly clear direction as to their intent, and they have, in some senses, summarized their intent through what they call the 3 Ds, the 3 Es, and the 5 Ts. So 3D standing for democracy, demography and demand. The 3 E standing for empowerment, efficiency and equity. And the 5 Ts standing for talent, tourism, trade, technology, and I can't remember the 5th one. But the fact is that everything hinges on how effectively the government, whichever government, is in power, reinvigorates the executive arm of the government. That is, I think, going to be the critical. It's not so much what are the issues, it's really a question of how do we implement those issues.
Right.
And in order to implement them, we need to make sure that the bureaucracy no longer fears the act of omission. Today, the act of commission. Today they fear the act of commission much more so than the act of omission.
That's right.
And that fear has to be dispelled. So that must be a primary focus and direction of the new government.
Rohit Prasad, let me come to you. I want to ask you a similar question. What do you expect the new government that comes into place to get the investment cycle back, get the confidence back as far as corporate investments are concerned?
Well, as far as the new government is concerned, they certainly have their task cut out for them. I would like to just point your attention to the fact that the problems facing our economy are actually structural in nature. We have exhausted our ability to grow based on human capital in terms of IT, and now we need to start moving towards manufacturing. that means that we need to take agricultural land and move it into industrial use. We need to move into the second generation of labor reforms, and these things will help our economy to move ahead. These things will help us to reduce our import burden, to increase our exports, get our currency back on track. And these are not easy problems to solve, especially if the government is not got a full majority on its own. So I think at this point there is a huge overhang of expectations, which is not going to help the new government when it comes into power. And I would caution against such an overhang of expectations, and I would be a little more circumspect about the prospects for whichever government comes into being. At this point, I would also like to point out that the stock markets are doing well at the close of this government. Perhaps it is a way of saying thank you for a government which has delivered 16% annual returns on the stock market, unprecedented since independence. The growth was 5% during NDA.
Some would argue thank you or good riddance, but that's another debate entirely. I'm going to take a break on that note. When we come back, we're going to talk about the road ahead. Specifically put the spotlight on Delhi and also on the manifestos of the two principal parties. We'll be back in Political Capital in just 2 minutes. Welcome back. You're watching Political Capital on Bloomberg TV India. I'm joined by Ramdev Agarwal, Vikram Mehta, Pankaj Vora and Rohit Prasad. Mr. Mehta, we were talking about the investment cycle revival and so on. A large part of the conversation last year was about the struggling currency. How do you think the currency is poised? Do you think the issue concerning the current account deficit, issues concerning the volatility of the currency will not be such a problem once a new government comes into place?
I think the issues have to an extent been addressed. The current account deficit has been checked. It's come down quite appreciably. And there is substantive liquidity, foreign institutional investor liquidity that's sort of shored up the currency. Clearly the exchange rate will be volatile if we have a government that does not address the core fundamental weaknesses of the macro economy, which is, I think, the fiscal deficit, the fact that major investment projects are still held up, the fact that manufacturing growth is abysmally low, and the fact that there has been no major legislation to really address issues related to labor reform or pension reform and so on and so forth. So the currency, I don't think is not going to be so much of an issue unless and until unless we find that this government is so fractured, or the new government is so fractured, that these core issues are not addressed. I think at the end of the day, we really have to look inside the country to see how we can revive manufacturing growth, how we can really put back some steel into the rusted framework of the bureaucracy and the executive.
Ramdev, just a point about rupee. We're seeing at a time that we're seeing fairly healthy capital flows both on equity and debt side. Do you see that continuing once the new government comes into place? Do you see the currency volatility being in a slightly more manageable range?
Yeah, so if the quality of mandate is very good, clearly the mood outside is clearly to send money in, and it also depends on how the government behaves. I mean, immediately after coming, all the promises, manifesto, at the end of it, what you do is very important. So the foreigners are long-term investors. So they would come in only if they feel that there is some change in this country and they are welcome, and the foreign capital is welcome. If that were to happen, the tsunami of liquidity is waiting to come in for the right projects and right kind of environment. And if that were to happen, in that case, I think despite that, I would think that rupee will remain very stable at about 60, maybe a rupee or two plus minus, but it will stay at around 60, because I don't think the bureaucracy will commit the same mistake of last 10 years when they allowed the trade capital flows to determine the value of rupee rather than the trade flows.
Sure.
So this time I think it will be very trade competitive rupee at about 60, which will help export to gain momentum, and they'll build the reserve to maybe half a trillion or 2 trillion, half a trillion to a trillion. So there is enough cushion right now for the reserves to be built. And eventually, I think what could happen is that interest rates, I mean, depending on inflation, interest rates could collapse in India. So my sense is we are going to see very stable rupee at about 60. If mandate is very weak, in any case it will remain 60.
Right.
And if it is mandate is very strong, then also I think it is going to.
So you don't see this, the possibility of appreciation is not so much.
I will be very surprised.
Okay, let me shift focus now and talk about foreign direct flows. You know, we talk about FII flows very often, but what about FDI? Rohit, come in on this. If you look at the manifestos of the two principal parties, their approach, philosophy towards foreign capital, attracting foreign capital is pretty much the same. How do you read this? Do you think that there is likely for India to be attracting greater FDI flows if a new government comes into place?
I actually feel on this that the FDI policy of the two parties is more or less the same, except that the BJP is against FDI and multi-brand retail while the Congress supports it. In fact, I think that there is a big misnomer that there is a very big economic policy difference between the two dispensations, the UPA and the NDA. Actually, there is a significant amount of convergence in their economic philosophies. Neither is the BJP more market-oriented than the UPA, nor is the UPA more welfare-oriented than the BJP. If you notice that the BJP has supported the Narega program, they have just made a qualifier that they are going to make sure that more assets are created out of it, which in any case is the objective of the program. And if you look at the UPA, they are more market-friendly in terms of foreign direct investment. So I think we need to be very clear about this, that the economic philosophies of the two major dispensations are converged in India, and they have the implementation may be different in the case of the NDA or the UPA, but the philosophies have converged.
Vikram Mehta, come in on this. You know, we often talk about, when we talk about FDI policy, the headline grabbing, the FDI retail always grabs the headlines. The larger point, of course, is, do you think that either of the two principal parties or the coalitions, either the NDA or the UPA, offer a bigger or a different promise in terms of attracting foreign capital?
I agree with the previous speaker. I think there is a fair amount of convergence between the economic policies of the two mainstream parties, and indeed there is a convergence with regard to their approach to FDI. If there was to be a difference, then it would be that the NDA or the BJP manifesto appears to be more pro-business as distinct from necessarily pro-market than the Congress/UPA manifesto. That said, the fact is that FDI investors into India are looking for an environment that offers contract stability, operating environment stability, move away from issues related to, say, taxation. The retrospective tax rules have really shaken investor confidence. And those are some of the measures that I think any new government, whatever is the dispensation of that government, is going to seek to avoid, to repeat. I mean, they're not going to repeat those mistakes. Those mistakes were what really shot or eroded the confidence of FDI. Now, having said all that, FDI cannot invest in India unless the opportunities for investment are open. And this again goes back to the issue of bureaucracy and red tape. The problem right now is that there are no decisions being taken on unclogging major investment opportunities.
Right.
The question that the new government will have to address is, how do we streamline the approval processes? If we can get the bureaucracy to sign on the files, if we can expedite these processes, then I have no doubt that the environment will, that the foreigners will start to invest in a slew of projects in this country. There are enough opportunities only if the bureaucracy allows them to invest.
Let's get some real politics in. Pankaj Vora, the view in Bombay is that the momentum is clearly with the NDA. How crucial is this phase of polling for the NDA and for the BJP, specifically in places like Delhi?
No, it is very, very crucial. You know, today's polling in Delhi, for instance, will determine whether there is indeed a Modi wave or it is just a creation of the media. You know, the thing is that BJP has always been a party which has done well in so far as Delhi is concerned, and now it is pitted against the Congress and the Aam Aadmi Party in a triangular contest. Most of the candidates the BJP has fielded, you know, have not been able to raise the level of their campaign. If Mr. Modi's wave is indeed there in the capital, you know, BJP can win all the 7 seats.
Sure.
But if there is no wave of Mr. Modi,
Sure.
BJP can be in real trouble, at least on 4 to 5 seats, and you know, it will face a very, very stiff challenge from the Aam Aadmi Party, because I think Congress is not very much in the fray, because there is a very strong anti-Congress sentiment sweeping the city, and Congress candidates, you know, though they may be the best candidates out of all the 3 parties, will not be able to, you know, do well at all.
Welcome back. You're watching Political Capital with me on Bloomberg TV India. Joining me now is Ramdev Agarwal of Motilal Oswal, Vikram Mehta of Brookings India, Pankaj Vora, Managing Editor at Sunday Guardian, and Rohit Prasad, Associate Professor of Economics at MDI. Ramdev, we were talking about what this would mean for markets in specific. A large expectation from this market was about divestment, strategic scale. That happened. The divestment happened at the fag end of the UPA. Do you expect some sort of kicker to happen as far as the markets are concerned from in the primary markets from strategic sales standpoint?
Strategic sale is too early to talk about, because even if NDA comes and if you see the Gujarat experiment, they have done nothing like that.
Right.
They have in fact
bolstered government-owned companies.
Yeah, and they have put the bet on better governance of the thing, like Gujarat Electricity Board. They turned around and made it profitable. So probably that would be the first model they might try, instead of taking head on. And then again, it depends on the quality of mandate, as I said.
Right.
If it is a clear 300 plus kind of a mandate, in that case, the bold measures like this can be thought out. But if it is 200, 220, so I think they will not even think about it.
What about IPOs?
IPOs is a market phenomenon, and I think in the second half of this year, irrespective of what happens to the outcome in terms of quality of government, I think IPO is cyclically, and after a long break, it is bound to come back in the second half of the year.
So you expect the primary market to bounce back?
Sure.
All right. Vikram Mehta, one aspect that you spoke about was about stalled projects. Some data. There are over 250 projects, stalled projects, worth over $200 billion, $230 billion to be precise, that the Cabinet Committee has put out, that are stalled. That's the money waiting, locked in projects. And many argue that these are locked because of state government decisions, because of legal cases. How much can a new government do to unlock any of this?
One of the political economic questions that we, all of us, need to address is the fact that any government in India is sitting on the horns of a dilemma, or actually put it differently, and let me borrow a phrase I read somewhere, it's a trident of a trilemma. And the one prong of the trident is the fact that our democracy is a somewhat messy democracy. We have coalition politics at the center. That does not allow for statesmanship in leadership. The second prong of the trilemma is the fact that we have a very unequal society where large parts of our society need to be provided affordable necessities of life. Subsidies are an integral aspect of our economic policy and have to remain that. And the third part of our trilemma, or the third prong of this trilemma, is that our economy is integrated to the international markets. Now, any government, every government is going to have to balance these three sort of conflicting forces. So when we talk about what is the most effective way of a new government actually addressing the critical issues that the market might then find positive, we have to take into account that we are not going to see a leadership that can ignore the need, for example, subsidizing the poor. The real issue is, will the subsidies be from the budget, or will it be from the balance sheets of public sector companies as it is? The second issue is, will the subsidies be distributed efficiently, or will they be distributed inefficiently? Now, if the market could find the government, any government, is able to tackle these issues, plus somehow, as I said earlier, expedite the approval processes that have held up all these projects and get the various ministries at the center and the relationship between the center and state to be a more harmonious and coordinated relationship, then I think it's going to have a very positive impact.
Last round of questioning, gentlemen. Pankaj, I'll come to you. What is the possibility, while I keep saying that, the market seems to be factoring in an NDA victory and so on, let me play devil's advocate. What happens if there's a fractured mandate? And what is the likelihood of a fractured mandate?
If there is indeed a fractured mandate, the possibility of which is very, very strong, then of course, there's going to be an unstable government at the center. And with an unstable government, a lot of things which, economists or people who are, concerned with the economy of this country, they will have to rework their theories and they will have to rework their strategies. Because when there is a coalition or an unstable government, more time is spent by political parties on politics rather than thinking about economy. And, it is a question of survival in those kind of cases, and economy takes a back seat. And, in case of fractured mandate, the entire, game totally changes. And it is only, in an ideal situation, whatever we have been talking about in this program, all those things are possible if there is an ideal situation, which does not seem to be happening. I think the way things are moving out, there is going to be a very, very unstable period of political, thing which is going to be on in this country.
Ramdev, final word with you. The markets have been extremely nervous about the possibility of a fractured mandate.
Yeah.
Why? And secondly, irrespective, would you tell your investors to go out and buy?
Yeah. See, the point is, if you're an investor, traders, clearly they have to be on the guard, because you have to build your payoff metrics in a very short-term basis, because market can go to 7,000 on the eve of this thing, and you get a massive, negative surprise, and you get a fractured mandate. So obviously market will come back to where, say, it started from 6,000, it may have that kind of correction.
So there will be a sell-off.
There will be a huge correction if the mandate is not as per the expectation.
Sure.
So clearly there will be a sell-off, but eventually it is the corporate earnings. So corporate earnings this year has grown about 10-11%. So we are at about 1,300 rupees EPS on Sensex.
That's right.
Next year, irrespective of government, 25 rupees here and there, but we are talking about 1,500 rupees EPS. So we are talking about very strong earnings growth next year. And this has nothing to do with the election and what governments do. So if that were to come true at about even 1475, 1,500, then getting the 6,000 to 7,000. So market is not going to go, in fact, market might end up, irrespective of the mandate, at about 7,000, irrespective by March 15. So we have eventually, so if it comes down to 6,000 again, then it's a bet the house kind of situation, irrespective of the government. Because on a 1 year basis, we are seeing 7,000. If the political mandate is good, 7,000 is staring at you in 15 days. Otherwise, it will come down to 6,000 and again it will go back to 7,000 after 12 months, irrespective of who is the Prime Minister.
7,000 is staring at you. That's the headline from Ramdev Agarwal. Bet the house, he says, but that's all the time we have. Gentlemen, many thanks indeed. Vikram Mehta, Ramdev Agarwal, Rohit Prasad and Pankaj Vora, many thanks indeed for joining us on this special discussion on the political capital.